Trump has made the tax cuts permanent. He also did the overtime tax, the deduction of interest on car loans. All of that stuff he did really, really well. And of course, that's going to have very positive and massive stimulus effect. It's just primed for going, and it's primed to go a lot longer. It's going to be a great boom we're going to have.
Basenese. How do you see it?
Basenese, boom, all the bees, bring it on. I think this is going to be the big, beautiful bill kicks in. This year, you have a lot of foreign direct investment going, earnings growth. I mean, I look across the transom of all the economic data, and it's all looks very bullish to me. And for the record, I want to be clear that Jonathan and I were not those guys, the analysts at the beginning of this year, warning about a terrible sell-off. I think if you actually look back, people were really making popular this a BUSA trade, anything but the USA. And they're starting to do that again because foreign markets outperformed U.S. markets. But if you really look underneath the covers, 10% of that was just the impact from the dollar declining. It wasn't necessarily the fundamentals. And if you look in the U.S., I think the U.S. fundamentals are superior. Mohamed El-Arian was out this morning saying the same thing. I think you got to bet big on the U.S. That doesn't mean you ignore international markets, but you got to go where you know. And for me, there's a lot of opportunity here for us.
But I'm happy to see not only international, but also small and mid-cap stocks. We're seeing the market broaden out. So that's a bullish sign moving forward that it's just not these 5 AI stocks that are leading the charge anymore.
Yeah, you bring up a headline like that, it makes me think that was more of an English lit major than a business journalist writing that, trying to drum up controversy here, because if you look back, even on tariff day, and Wall Street got it wrong completely. The smart money in April was selling. They were getting out of the way. They thought it was the end of the world. A recession was imminent. And retail, Main Street America, good job, way to go. They kept buying the dip, and they ended up outperforming.
You're right.
Because
Retail
they focused on the fundamentals. And it's no surprise now that retail accounts for 30 to 40% of trading volume each day. So the smart money looked pretty dumb in 2025, which leads to headlines like that sound pretty dumb to me.
What is the red herring? Not that we should think about one, but if everything looks really good, what is sort of that black swan event that could...
I know where she's going. Debt,
yes.
the AI cycle. Oracle, Blue Owl.
You
POTUS
actually
decision on tariff?
No, you keep talking. Keep talking.
I don't know. I thought that was a ringer for you. I know you've been really concerned. Oh, it's Alphabet, because I love Alphabet.
No, Alphabet's done incredibly well.
Yeah, I know.
Is wildly outperformed.
It was a great call at 146 after the tariff tantrum, and now it's north of 300.
That's a bet on, hey, we're becoming Argentina, looking at how some of these commodities, these metals.
So we talked about with Larry the one time, we're trying to argue, is this a safe haven? Is it a momentum play? I think part of the commodities rally with gold and silver has been a catch-up play for just the money printing over the years, right?
Doesn't silver also go into EVs?
Yeah, so you have silver
AI?
has much more demand than gold in terms of industrial uses and technological uses. But these commodities move in cycles, and I know you know this as well from trading on the floor. Is gold first, then silver, then copper, then oil, right? So we're kind of moving our way through those cycles. But here's the thing: it's much easier to speculate in silver now and gold with ETFs and with leverage. And part of this rally in silver, I believe, and I'm curious what your thoughts are, is covering up those paper buying with actual physical buying. You have to back it up, those derivatives of it. So you're seeing that catch-up trade happening right now.
Yeah, I mean,
I was talking to someone yesterday, and they said, healthcare in this country is a mess. Everyone agrees. Everyone knows it's never going to get fixed. So unfortunately, you just have to continue to invest in healthcare companies because it's going to go up no matter what. Not no matter what, but you know what I mean. And so one of his calls was the healthcare ETF, he said, for next year, because that's the way it is in this country, unfortunately, because we haven't gotten a grip and figured out the solution. But you guys are both looking at me like you don't agree. So
look, I'm a free market guy, right? So free markets are the solution, not more free money.
Yeah.
If you look at this, subsidies are never going to solve the problem. You have runaway healthcare spending. I mean, this is the only industry, you probably, when you were a nurse, this is to this day still, that uses the fax machine for transport.
And the VA. The VA uses the fax machine.
So this is an industry that is woefully under-digitized, right? It is one that is well behind in terms of streamlining. There's so much cost that could be extracted from the system, but all of that has been covered over and made an excuse for by subsidies and handouts.
And dominated by government.
And exactly, I think that
50, more than 50% of all healthcare spending in this country is spent by government. And, you know, I fought against Obamacare. You had to be on mushrooms to think that Obamacare was going to lower premiums, was going to lower costs. Of course, people's costs have gone up under Obamacare. So, you know, Republicans, to your point, need to come up with some sort of a plan, some sort of an alternative. I hope a free market plan, but that's going to take some real political will, which I just don't know exists.
But I think the president's making the start of it with his focus on drug pricing, right? Like, drug pricing only accounts for a small percentage of, right, it's not enough, but you have to start somewhere because there is so much, we talk about fraud in other places in the market, right? There's so much fraud and abuse going on in the healthcare market. This is a structural problem that's causing inflation that can only be addressed by government solutions. We have to intervene.
This is great news.
It is great news. I'm going to steal a word you used before, multivariable, because the real estate market, there's no one easy solution. It's not just interest rates. It's not just portable mortgages. It's not just reform on the permitting side. It's all of the above. You have to incentivize building and construction of homes under $300,000 per unit. You've got to get rid of zoning restrictions. We're undersupplied by 3 to 4 million homes. So this is the right start. I think the president is very wise. You know, he's supposed to be having meetings now this week about an aggressive housing reboot. I think this is a promising sign. I mean, you're looking at decade lows in new home sales. That tells you you're way closer to the bottom, if not at the bottom. So 2026, absent any of these things coming to fruition, is probably going to be a good year for real estate.
I'm not so confident about the president's solution necessarily for a 50-year mortgage.
I don't like that.
I don't love that
I don't
either.
want my son going out and getting a 50-year mortgage.
Yeah, I mean, if this is a market demand, I'm down for it. But this comes from government, I would be very
Absolutely.
Yeah, I would say this. Real estate could be the catapult for GDP in 2026, and here's why. If you look at residential real estate investment, down 5.1% in Q3, down 5.1% in Q2. It dragged GDP down 0.2%. If we change and the pendulum swings the other way, that could push GDP close to 5%. I think that would be a huge boom for this economy.
When all, like, your roof caves in and the boiler goes all at the same time and there's nobody there to fix it but you will realize rent wasn't so bad.
Even in a tough job market too, right? If you have to change jobs and you own real estate, it makes it very difficult. So I don't know what you think about this. I've been advocating for younger people, be investing in the stock market right now. That's a better investment than
but that's
real
what
estate.
they've been doing.
And that'll get you ahead to, the median age of a home buyer now is in the 50s, right? The average age is like 38. It's insane, but we're not in your mom's or your grandmother's or your great-grandmother's America anymore.
So I like that, and I was always a fan of investing my down payment instead of putting it in a house, except the counter argument to that is all of the other moral responsibilities that come with owning a home, being an ownership culture instead of a rentership culture. Conversation that people always have with me is, if the doctor's first recommendation is a pill, then they're a bad doctor. They need to be asking you about the root of the cause. What's your nutrition like before I just start prescribing you diabetes pills or whatnot, right? Let's try to find.
I think you're right.
So on this, they say, if they adopt, like, require nutrition training for physicians and restricting purchases of soda and candy using federal food assistance benefits, to me, that's sort of getting closer to the root cause of the problem.
Look, this is carrot economics. Forget Bidenomics. I'm for this. So I think,
Really?
I'm with you. And here's why. 90% of healthcare spending is on chronic diseases. That's reactive to our poor health, our poor habits, our poor access to food. We need to flip the balance and swing the pendulum back the other way, where we're being proactive. And that starts at getting at the root of these issues. That's why I love GLP-1 so much, because what it's demonstrating is all these downstream metabolic diseases that are getting fixed with it. The root problem is on the front side. It's our habits, our lack of healthy habits, our lack of healthy eating, the lack of clean ingredients in the foods that are on our store shelves. And these are not necessarily all decisions tied to the individual. These are structural problems that need to be reformed as well. So I think if managed, I mean, look, you incentivize more of what you want, right? So this is a way to incentivize it.
I've seen this before. I mean, Obamacare tried this. Remember Cass Sunstein? This was Obama's health care. He wrote a book called Nudge. And the whole idea was that government was going to nudge you into making the supposedly right decision. I'm frustrated by this. This puts more government money out the door, $200 million. And does government really know what's best for our health?